Hi everyone, in this video I'm going to highlight my top 3 tech stocks to buy for 2023 and beyond. So let's get right into it. The first tech stock I'm going to recommend is Alphabet, the home of Google and YouTube. Of course, the company primarily makes its money from advertising, and advertisers spent a whopping $763 billion in 2021. That's excluding political advertising. That figure is expected to grow by roughly 10% in 2022 once the figures come out. And over the long run, I expect advertising to continue growing near $1 trillion. Businesses are always going to want to influence the purchasing decisions of consumers, and to do that, they're going to need to work with companies like Alphabet, that's home to YouTube and Google Search, which are free to consumers, but they capture billions of monthly active users. Think of yourself when you're about to make a purchase or considering making a purchase. You're likely going to start with a Google search or maybe a YouTube search to look at a demonstration of the product or a review for the product. And for that reason, many businesses would love to get in front of your search or in around your search results to get a sponsored search or to have an advertisement during the video review that you're watching for the product that you're interested in buying. For that reason, Alphabet stands to benefit, and for several years, because there's going to be difficulty for any other business to encroach upon this niche that it has created for itself. Alphabet has generated such excellent profit margins and cash flows that it's had enough money to invest in moonshot ideas, one of which looks like it's going to pan out to be a really lucrative investment, and that's been Waymo, the driverless technology company. Google's Waymo is um, arguably the leading company in terms of driverless technology, and if that turns out to be a big payoff, that's going to be icing on the cake for investors on top of the ad revenue and ad profits that the company has been generating. All right, the next tech stock I recommend to buy for 2023 is Microsoft. Of course, Microsoft's software suite is entrenched among enterprises, governments, and consumers as well. The expansion of remote work during the pandemic means more workstations will need software, right? Now, not only does your office computer need to have software, it needs to be updated, needs to have Windows, needs to have access to Excel and Word and PowerPoint and all of the other software suite, maybe Microsoft Teams, all of that. But now, if you have a home computer, that computer needs to have Windows, needs to get access to Excel, Google, and all of that. And every 3 to 5 years, instead of just your computer at the company headquarters needing to be updated, your home computer will probably need to be updated too, because now folks are, if they're not working remotely, the more common thing is a sort of hybrid work where you work in the office for 3 days and home for 2 days, or in the office for four and at home for one, or whatever the mix might be. Regardless of that mix, it's given rise to the need for the home office. The home office has become incredibly more popular than it was before the pandemic, and that's great news for Microsoft stock. And oh, by the way, the stock is trading inexpensively as well at a forward PE of 24.93. It's near the cheapest the stock has been going back until before September 21, and I believe the company's got great prospects longer term. The final tech stock I'm going to recommend to buy is Chegg. Chegg is a little known company you may not have heard of unless you've been to college recently. If you've been a college student in the last, I would say, 6 or 7 years, then you're very likely to know the name Chegg. It's got nearly 90% name recognition among college campuses in the US. It's very popular. It's more popular on college campuses than Amazon. That's how popular Chegg is among college campuses. It's got 80 million pieces of proprietary content that has been created by user request. The way Chegg works is you sign up for a subscription between $15 to $20 per month. As part of that subscription, you get to ask 20 questions per month that are answered by Chegg's subject matter experts. And then those question and answers are available on the platform, on the website, for all of Chegg's users to benefit from. So it's created this database of 80 million proprietary pieces of content it's built over the years that it's now gaining the benefits from. Because if you're a Chegg subscriber and you go on the website and they already have the help that you're looking for, you're not going to ask that question anymore because it's already there. And so Chegg's not going to have to pay to create that content again. That's great news for Chegg investors. And college enrollment is rising after falling in 2020 and 2021 due to the pandemic. Going to college is already hard. It was much harder during the pandemic. And so many students took fewer classes or took a year off. Now they're coming back. That's great news for Chegg investors. And also, like the other two I mentioned earlier, the stock is inexpensive, trading at a forward price to earnings ratio of 19.7. All right, so that's all I've got. Those are my top 3 tech stocks to buy for 2023. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.